Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors. Just after the close, August 23rd, Friday afternoon. Today, one of the more disappointing days of the year in equities. And I say that for a couple of reasons. Throughout the week, we saw a good solid bid to the equity markets. Weakness was being bought. Nice strength across multiple sectors, really 9, 10, 11 sectors. Got off to a decent start this morning. Powell did a solid job. And then you got into the tweet scenario with China. Keep in mind, China overnight talking about a tariff on $75 billion worth of goods. Markets swallowed that right up. 11 o'clock this morning, we're green. White House gets involved in a number of different, one major tweet and comment, and the market turns around. What that's showing us, as it has been over the last really 12, 15, 18 months, is confidence in this market is dripping. Each time we make a run towards those January 2018 highs, we get repelled. And as confidence starts to drip, we have to make sure that we have our capital allocated properly. Why do I say confidence drips? I pay little to no attention to consumer confidence indexes and economic lagging indexes. What we do look at is the fear trade. We pay an awful lot of attention to bonds, gold, and the yen. Why do we look at those three? Those are pure fear trades when you have a strong bid into those asset classes. 10-year at 152 today. In an economy that we have, regardless of where rates are globally, 152 down from 320 8, 9, 10 months ago now is a dramatic move. Sure, we're being forced down by some of the rates, negative rates globally, but the money that's flowing into that asset class feels a bit high. When we couple that with gold going out at 3-year highs and the yen trying to break to new highs, the yen is Asia's fear trade. When Asia and the international markets come under fear and lack of confidence, they run to the yen. So just watch the yen when you're looking at international. I've been mentioning one of my concerns over the last, let's call it 3 months, where the U.S. has been flirting with 3,000 on the S&P but unable to get through there, was the weakness internationally. And that's continued. We're just not getting a bid in Asia and Europe that's needed to help the U.S. We talked about this last year. We talked about this in September of last year. Can the U.S. continue to rally as it was in September of 18 with the rest of the world's equity markets flirting with 52-week lows? We couldn't. Russell 2000 down 15, 18% in 8 weeks following that. S&P held in better. S&P's held in better for a number of years now on the downside. Starting to lead some of the weakness now, but we'll keep an eye on that. So we have a similar situation now with Asia and Europe flirting with 52-week lows. Some of those markets flirting with last October's lows. Something that we'll be keeping a close eye on. So where do we sit in our strategies? U.S. strategy, 10% cash. We did nibble last week. Looked great till about 11 o'clock this morning. We didn't do any buying this week. Important to take a look at what did we buy last week. We bought utilities, REITs, and XLP, which is your consumer staples. Those are the 3 leading sectors this week. Another obvious example of the fear trade. So while we look at a strong economy nationally, here in the U.S., we can't take our eyes off of what the market is telling us. And it's not the S&P. It's where capital is being allocated. I kind of feel sorry for Larry Kudlow, who is Trump's national economic advisor. He's a markets guy, Kudlow. I respect him a lot. He's been around for a lot of years. He is battling right now a Svengali-like relationship between Trump and Peter Navarro. To a lesser extent, Lighthizer. For some reason, Navarro has Trump under his spell. And much of what we're seeing in rhetoric, whether it's tweet or verbally, I really think is spurred on through that duopoly of Lighthizer and Navarro. If that can't be broken, some of the unintended consequences in the markets will start to come forward. So we have to be careful. We're fairly optimistic on the economy, the national economy, but we can't run on our own gas, on our own fumes. Without that help, we're going to have to be fairly defensive and buy pullbacks, not chase rallies. Hope the weekend is well. We'll see you next week.